the Bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu. We're counting you down to the closing bell, and here to help take us beyond the bell, it's a global simulcast with our friends Massar and Tim Stenovec. Welcome to our audiences across all of our Bloomberg platforms on a day where we see markets on the back foot all day long, selling into the close here, Massar, on what's setting up to be the broadest base sell-off that we've had, at least going back to March.
Yeah, it's funny that you say that. We were looking and talking about the major industry groups in the S&P 500. You're seeing selling really across the board. If you're looking, though, for some outperformance, check out those home builders. And I guess you kind of have to thank Warren Buffett. I'm going to talk about it a little bit later on in my gainers, but he's been buying some new bets into the housing sector, and that's really give them a kick.
Carol, how closely do you have to look for outperformance today? Pretty closely.
I don't know. I found it pretty easily.
455 stocks in the S&P 500.
Well, I was just taking a look at it, guys. I mean, we talk about these 90% days. I know that's kind of just an imaginary number we came up with this, but this is, at least right now, one of those 90% days where 90% of the S&P 500 is in the red.
You know, we're actually seeing volume's 10% lower as an average over the last 20 days, Scarlett, which surprises me that we're actually seeing activity on a summer day in August.
Yeah.
Well, it is a down day, and volume does tend to pick up on down days. So it's the slow melt up that detracts very little volume. What's notable, and I was just looking back at the decline advanced line, almost 6 stocks down for everyone that is higher on the New York Stock Exchange, the broadest sell-off since late April.
We should point out that we are seeing some modest buying into the close, but not enough to sort of overcome the big losses from earlier in the day. I think probably one of the more notable developments here, at least when it comes to the technical levels for the S&P 500, is that it looks like we're going to get a close below that 50-day moving average. It would be the first time that we've closed below that line, since, once again, late March. 52 points lower on the S&P 500, 4,437 and change as we wait for the numbers to settle, down 1.2%. The Dow Jones Industrial Average down 360 points, below 35,000, down 1% on the day. The NASDAQ Composite lower by about 157 points, or 1.2%. And the Russell 2000, stop me if you've heard this before, down 1.2%.
Wow, yeah, so across the board, as you guys mentioned earlier, so I'm just going to go back come over to your side. 42 names only in the S&P 500, Scarlett, actually gaining ground, 461 to the downside. So really broad-based selling here.
And let's take a look at the sector breakdown, because it's a pretty straightforward breakdown today. Everything in the red. Actually, if we update that, pharma,
come on.
that's barely. I mean, that's
come on.
Does it count?
Embrace it.
I don't think so. I would call that down at this point. Actually, you know what? If we update that, because I'm just sticking it over, it's off by 0.1%. So if we could ask the control room to refresh. But in any case, all 15 members of the S&P 500 Banks Index also lower as well, with that group leading the declines, off by 2.8%. In fact, you have 3 groups in the red by at least 2%: energy, autos and components, and banks.
All right, now I'm going to freak out because now I'm really worried that my gainers are not going to hold. But let's see what we've got here.
There we have some green. Scarlett hates the green, but look, Carol comes through for us.
Don't worry, Scarlett. My terminal is showing
there.
all red too, Scarlett. Don't worry.
She is.
I just worry a lot. That's all.
She's so normal. Okay, so let's get to it.
Come again?
Unlike the 3 of us.
All right, it's normal with quotation marks. All right, let's get to the home builders. I talked to you about the outperformance here. Look at D.R. Horton. It's up about 2.9%. Number 2 gainer in the S&P 500. Lennar, by the way, was the number 4 gainer. Getting a boost, those 13F filings. Thank you, Berkshire Hathaway. They bought positions, D.R. Horton, Lennar, and VR in the second quarter. All 3 home builder positions new for Berkshire Hathaway per that most recent 13F filing. NVIDIA, the darling of the year. Oh, I had Amgen. I thought I switched it to NVIDIA. All right, so we'll go to
NVIDIA down there still. It's there. It's there.
Yeah, Carol, you just have to keep going. Amgen.
Yeah. I'm trying to keep track. This was a top gainer in the S&P and the NASDAQ. Thank you so much. Up about 2%. I have no idea why. There was no fundamental reason. Yesterday, Mizuho raising its price target from 214 to 223, closing at 266 and change. So maybe they want to raise it again. And their bonds were more than twice the average in terms of trading for this day. So I don't know. Help me out here. NVIDIA, there it is. Thank you, Scarlett, for that. Up about 0.4%. At its high, was up about 3.5%. UBS raising its price target, and this follows a move by Morgan Stanley, which also boosted its price target, ahead of its earnings next
All right, you had the hard job today, Carol. I had the easy job today, finding decliners. The worst performer on a percentage basis in the S&P 500, Discover Financial Services, falling today after the company's CEO, Roger Hochschild, said that he's going to resign. At the same time, Discover also saying it's going to focus on improving compliance and risk management. You'd think that on a day where an S&P 500 component falls 9%, it would be the worst day in quite a while. It's only the worst day since July 20th. So
you kind of separated those two elements. And I'm curious, Tev, I mean, the idea that this announcement would come and that they would couch that announcement in this idea of a refocus on compliance?
Well,
there's a lot you can read in between the lines of that.
Well, you can actually, yeah. I mean, it just comes a few weeks after Discover actually announced that it would pause share buybacks amid an internal review of compliance, risk management, and corporate governance. So there you go.
I always love when you have to refocus on compliance. Shouldn't you always be focused on
No, the
compliance?
buck stops with the CEO.
I guess so.
All right. Remember a few years ago when we talked about C being in the green all the time? C Limited, it's that e-commerce payment services, digital content company focused on emerging markets based in Asia. Well, based in Singapore, it was in 2019, it was up more than 250%. 2020, it was up nearly 400%. Well, today it had its worst day ever, falling close to 29%. The stock is down nearly 90% from its highs back in 2020. Reported revenue that missed analyst estimates and said it plans to increase investment, a move that could erode those profit margins. And then another check on Hawaiian Electric Industries today, down another 31%. The company wiped out $1 billion in market cap yesterday. Investors, that is, did it. Today, finishing down, wow, close to more than 30% once again. Analysts are starting to raise questions over whether the company will be able to withstand the pressure if it does end up being at fault. We should note that no official cause of the fires in Maui have been determined, but it has become the deadliest in the U.S. in more than a century.
Yeah, let's take a look at what's been going on in the yield space. There were a lot of fireworks earlier in the day, right around 8:30 a.m. when we got that U.S. retail sales report. A huge spike in the two-year yield at one point above 5%, so a level that we haven't seen in quite some time. Now, as you can see on your screen there, that we did see a downdraft later in the day, almost immediately, as a lot of people started to reassess Fed conditions here. The net effect of it was the two-year yield on the day down by about 2 basis points. Across the longer end of the curve, you're higher by about 2 to 3 basis points, including the 30-year yield right now at 4.32%.
You know, I just want to give a shout out to Carol Massar, who for so long kept us up to date on what was going on with the NASDAQ Golden Dragon China Index and all those Chinese stocks.
I love you, Scarlett.
You look at HXC Index, that's the ticker for the NASDAQ Golden Dragon, off at 1.9%. And of course, FXI, which tracks the big cap China stocks, the ETF, that's down 1.6%. What do you think about the China data? What do you think it was about the China data that really got people concerned? Because we knew that the data was going to come in fairly weak.
Yeah, I think it's just a continuation of the struggles. They can't seem to get it. They can't get domestic spending to happen. They're now worried about the impact of real estate, spreading out into financials and kind of watching more of the traditional financial sector to see if it ends up there. I just feel like, you know what, Scarlett? Every day it feels like there's just another sign that they just can't seem to get it right.
Drumbeat of negative news, right? And then the rate cut feels like...
Surprised everybody, right?
Surprised, but in a way that was bad because it was like, oh, we're behind the curve. Now we have to somehow get ahead of it.
I am curious, if we could bring it back just to the U.S. here. Why do you think there was that disparity in the reaction between what we saw in the China's economy? And we should point out, too, that this wasn't just about the data or even what the PBOC did, but when you have Janet Yellen come out while she's supposed to be doing this world tour for Bidenomics, basically saying that the ripple effects of China does actually pose a risk, something that, let's face it, they haven't acknowledged before. I am curious as to how you fold that in with the data that we're going to get later this week, housing data, Fed minutes, and, of course, more earnings out of the retailers.
Well, I would say that a lot of U.S. companies continue to be inextricably bound to China, not just from a customer perspective, but also from a manufacturing perspective. We've seen a decoupling happen over the last couple of years, the so-called nearshoring. But we still have a lot of companies like Starbucks, like Nike, like Disney that rely on China. And if the Chinese economy isn't doing well, if the Chinese consumer is not doing well, it affects companies here at home.
That's definitely one of it. I wonder, though, to some extent, whether Janet Yellen talking about China having a ripple effect is going to at some point affect the Fed. Remember, Jay Powell used to say external events, international events, which was code for China. Could China slow down and the tepid policy response be something that tips the Fed to maybe cut rates sooner than what people are forecasting now? I don't know, but it's a possibility.
Peer pressure? I mean, I don't know why why that would affect what the Fed does here if we're not seeing it reflected in the data here at home.
No, it's not. It's not. But the good thing is, I mean, if you're looking for a silver lining, is, I mean, doesn't this add to the deflationary, I guess, the upside for deflation when it comes to the U.S. if China is sort of hobbled or wobbled or whatever phrase we're using?
But Scarlett brings up a good point, actually. Do you guys remember it was like probably 8 months ago? I think it was New Zealand cut rates.
Yeah.
And in the U.S.,
we all
reaction,
remember where we were that day.
And the reaction here in the U.S. was like, wait a second, a central bank is cutting rates. Maybe the U.S. central bank will cut rates soon.
All I would
they
know,
did it.
all I would say, look, go ahead. What?
No, come on. The U.S. I mean, look. I hate to sort of bang our chests here in the U.S., but I mean, look. I mean, we're the largest economy. We're the most influential economy, and I don't think Jay Powell is taking a lead from any other central bank than his own members.
They're not, but the Fed was behind.
Right.
It was particularly against when you compare to the Latin American central banks.
No, it's like we like each other and like talking to each other.
He was behind. Well, but look at the results so far.
The only thing I would say is during the great financial crisis, everybody said it's not going to impact the emerging markets. They're separate. They're immune. And it impacted everybody. So all I would say is, as the second biggest economy,
are you
what happens
calling
in
the
China?
Next great financial crisis?
I'm not saying it's a GFC, okay. .2 or something, or 2.0. It's an important economy.
Yeah, no, I'm not saying it's not.
It bears watching. I mean, we don't know how it's going to
It is the second largest, Carol.
It's a good thing we have Wednesday because we can continue this.
We have to do this tomorrow.
If they force us. All right, guys. We'll talk to you later. Have a good. What do you have? A few minutes left. You guys get out of here in 30 seconds, right, or something like that?
Yeah, we're gone in 2 minutes.
Yeah, we have like 20 hours. All right, that's a wrap. Our cross-platform coverage, Beyond the Bell, we call it, radio, TV, YouTube, Bloomberg Originals. We love. We'll see you all tomorrow.